Good weekend. Ira Epstein with your weekend edition of your metals market update, and this is your wrap-up for Friday, and this is the 3rd of April 2020. Now remember, on our weekend edition, we'll look at one monthly chart, and then everything else is going to be a chart of the weekly look at the metal markets. Now you know what's going on. You saw the stock market down. The silver market had a good week actually, even though it was down today. Copper had a pretty good week as well, you'll see that. And the gold coming back up. Now it was an interesting day because you had the dollar strong, you had the gold up, the stock market down, and the notes and bonds getting bid up into sometimes very close to record territory here. So let's take a look at the first chart and get a feel for where we're going to go with these. This is the first chart of the monthly gold. And if we take a look, you have a market that came down, made a lower low, and it's getting a bounce in it. It's got a higher high, lower low. That is not a trend. Where the market has been able to stay strong is it's been staying over the 18-week moving average. And if we come back here, this is called a bullish crossover. It's when the 18-week average gets over the 100. In other words, the short-term average getting over the longer term. They got right through here. They had kissed, and then they crossed over right on this week, January 31st. And the market has been basically able to stay in a positive posture since then, but from that high week you had a pretty big drop, and now you're getting back into challenging the highs of that time frame. Remember, this is a monthly chart. That's what it is. When we come to the weekly chart of just closing prices, it's pretty similar, because if I come back here and we come back to this high week right here, here we are at March 6th. Remember, monthly chart, weekly chart. You got weeks, one line there's 4 of these weeks. But you come up, you get to your 1670, 240, you get that break back in the market, and then the market starts its rally back up, and this is where you're at. You still haven't cleared these highs. The bias is up on the chart, but you don't have a pattern that I like. You've still got the higher high close and then the lower one. When we come to a weekly bar chart, you get to see a little difference, because now we're looking at the highs and lows of the week. And when I put the swing line on it, it's still not a favorable chart. You still have a pattern of lower highs, and from this low to that one's a lower low. In order to turn bullish now, the chart has to get over 1699.30. Then, assuming you don't first take out this 1570 level, I'd have higher lows, higher highs. When I take a look at moving averages with it, you can see where the support comes in, 1558.10. That even if the market got through this 1570 level, right through here, actually the low, 1570, and it got down to that number, you still haven't taken out that low. If it were to hit that and then go all the way back up over 1699.30, I'd still have the bullish signal. In terms of Bollinger Bands, remember what Bollinger Bands are. It's an algorithm designed to keep the market trading within it 95% of the time. I teach that if you get over the band or you hit it, that's where I think pros take some money off the table. Why? 95% of the time the market's going to pull back into the band. And I know traders that markets get up there and they'll go, it's going to run now. I've been around this a long time. There's a reason the statistics on the band are 95%. 5% of the time it is going to stay out of the band. If that's the kind of bet you want, great. But you came up, back down hard. Could you withstand that? I'm not sure. Then you get to 1699.30. Now you'll go, that's still bullish. Well, if you had bought anywhere over that number and you're right where you're at now, you're still out on a full-size contract in the neighborhood of $4,000. I don't think that's so comfortable. When you look at the momentum of the slow stochastics, it's pointing up. So I have the slow stochastic momentum up. I have the bias up since I'm over the 18-week average. The one element I'm missing is the swing lines, because they're not pointing up. That's where I have to leave it. When I come to the gold-silver ratio, the ratio didn't peak out up here at 120.22 on a weekly chart. Don't know. This is a chart of closes again. Not the highs, not the lows, but of closes. When we take a look at a silver chart, right now I'm not friendly. And the reason I'm not friendly is I still have a pattern of lower highs, lower lows. I'm very aware that the daily chart came up and knocked the bears out of their position. If you follow the lower high, lower low pattern, they were knocked out this week. And on this chart, the bears can get knocked out if you take out 1484.50. The problem is you'd have a higher low, higher high possibility, but you're still under that 18-week average, so the bias stays down. If you do pop through that number, maybe you get to the 100-week first and fight a battle there. Wouldn't surprise me. In the copper market, is this market on this chart making a low in this area? That's what we're all going to be asking ourselves. China is coming back online. People say, you can't believe anything. I don't buy it. If you watch the smog maps, now if you look in Wuhan, they're starting to show the pictures coming out where the vendors are back in the street. As I understand it, all the high-end stores in Beijing are back to being open, Shanghai. So as I'm watching this, life is getting back to normal. It looks as though Italy has made and passed its peak. It's not ready to call an all clear there, or Spain, and I realize that, but South Korea is doing better. Japan has done better. We, unfortunately, we're not doing better. We're going to see our numbers race up in America for a while. But what we've got is our factories closed for copper usage. You know, most factories are not open right now. The government can say that they get open, but big factories, they're not open. Smaller ones, yeah, if you can keep people 6 feet apart and they want to work, why not? When we look at the platinum, we've got lower highs, lower lows, still in a bear pattern. Momentum has gone flat in the market. We did get excessive to the downside. We pulled back into the Bollinger Band last week, and we're within it. Now, this market still has room to drop. What would knock the bears out of their position? Taking out, I think, 750, 620. I don't think the bulls would take over then because you're still under these key moving averages up here. In the dollar index, we can see that the market came down to the lower band, went back up to the upper band, and just slip sliding. I've been trading currency since they began. It's one of my favorite markets when they're normal. This isn't normal, and trying to trade it is very difficult. I think more currency pairs are being traded than out-and-out futures on individual currencies, but that's what I think. Now, one of the things you know that I do is I start you off early in the morning with the fundamentals, what's going on overnight in Asia, Europe, and hitting America, what the overnight charts have looked like, because remember, we do start trading on Sunday night at 5 p.m., and we go all the way to Friday to 4 p.m. Now, we get an hour break on Monday, Tuesday, Wednesday, and Thursday, and that's it. So there's a lot to talk about, and what I want to do is get a video out where I'm telling you what I'm seeing, buy here, sell there, stop orders, why I'm doing what I'm doing, and show it to you on a chart without me in it. At that hour of the morning, you don't want to see me. But later in the day, look at it, I dress nice. So as you get through everything, what do you do with this? The first 30 days, because this is a subscriber video, it's very different. I am really saying I want you to buy here, I want you to sell there. This is what I think. A lot of information thrown at you. It's about a 20-minute video, by the way, and it's done in such a way on our website that you could just, you take there's a slide bar, and as you go over it, you can get right to the metal section, currency section. You get right from section to section to save you time. Typically a 17 to 20-minute video. So there's a lot of info. $7.95 for the first 30 days. After that, if you decide to stay, $15 for the next 30 days. It stays at that, or you can go to a 1-year subscription. In addition, you get our handheld application. So you're able to keep up with the markets, get the news. When my videos come out, they'll pop. I put out a push notification. When the notification hits, just hit it. The videos are going to play. It's a lot of information for $7.95, and it what's keep these shows going. So hope you take advantage. You go to our website under the word research, and that's how you get to it. I'm Ira Epstein. You have a great weekend, and I'll see you all come Monday. Take care now.